Nice to see both of you.
You missed me, didn't you, Yo?
I did. I haven't spoken to you in a while, Oscar. A little disappointed. I think I've spoken to Jake more recently than I've spoken to you.
Yeah, we did connect not too long ago.
Not too long ago, yes.
Hey, just give me 1 minute here to get properly set up. You can hear my little one in the background, so just 1 second.
No problem.
Okay, here we go. Well, good morning, everyone, and welcome once again to the KoreSummit Webinar Series 2021. Another great topic today with two big hitters in this market. We are finally we're going to have more and more discussions about this secondary market trading and the impact it's going to have in the private markets. So just to remind everyone, the format is always the same. We're going to have a conversation. We have two great individuals from two firms who are running secondary market ATSs, and we're going to have a discussion about the impact of it. And then, of course, we're going to give you an opportunity to fill in with questions, but otherwise, we're just going to keep going. No presentations, it's just merely having a discussion. And for everyone else, obviously, this is being recorded. It will be available on YouTube Live or on our KoreSummit.io website. So, first of all, I want to say thank you both, Jake and Joel, to make it here this morning. I would like everybody to first, if you could introduce yourselves and some information about your, obviously I want to keep this regarding the secondary market, about your registered secondary market ATS. Jake, why don't we start with you?
Terrific. Well, first off, Oscar, really appreciate the opportunity and appreciate you inviting me on. My name is Jake Gallagher. I'm a director of private secondaries at North Capital's PPEX ATS. We facilitate secondary trading in Reg A securities, Reg CF, Reg D, Reg S. And we've been working on the ATS now. It feels like for the better part of 2.5 years. It was a long period throughout the regulatory approval process, and we're starting to onboard issuers now, and looking to partner with firms like CoreConnex and Rialto and other ATSs in the hopes to try to create greater liquidity and transparency in the private market. We've been a boutique investment banking firm for the better part of a decade, and we've solely focused on private securities. And we believe the secondary market was it was an easy transition for us, just kind of given our business in the primary market. But yeah, that's a quick intro on me and the firm.
Great. Joel.
My name is Joel Steinmetz. I'm the COO and co-founder at Rialto Markets. And our story is not terribly unlike the one Jake just described with North Capital. We are involved in both the primary and secondary sides of the private markets. We also had that long haul with the regulators to make sure that we can get our approval, which we got last April, to allow us to trade the private markets in both traditional and digital form. We work with companies like North Capital and others, and I think we both have a similar idea in saying, how can we find a way to change the private markets? It's for certain people, the people that are involved in it very much so, it might be not considered to be broken, but we feel that there's great opportunity to expand it, to get to new users, to advance it in different types of assets that are available for trading. And there is a challenge in finding a way to make it work in the secondary markets. From our perspective, we're going to deal with only regulated securities, Reg A, Reg D, Reg S, Reg CF, anything that's regulated, but it will have to be regulated because we feel that's an important element to make sure that the ecosystem is able to shift and expand upon itself. Not necessarily fix things. Certain things are not broken, but certainly to expand and enhance the opportunities within the private markets.
Great. And so I hope it, I've learned a lot the last little while. So thanks, Jake. That conversation that we had recently, it's been enlightening for me. And it was timely because I can come into this discussion, hopefully I hope you all agree that if we can educate people what an ATS is and the different perspectives, I'm not trying to put you on the spot on it, but both of you operate two different types of ATSs. So, Jake, if you could walk us through the journey on yours, what sets it? It's an ATS registered with FINRA. You're fully licensed in all 50 states. But then there's another layer that people need to consider when they're going to use the PPX secondary market.
Yeah, no, absolutely. So I think, our approach is a little bit different than some of the other groups out there, in that, while we are a broker dealer, and we have dealt with retail investors and institutional investors directly on the primary side. On the secondary side, we've started out as strictly institutional on the ATS, and what I mean by institutional is that a retail investor, it can trade through PPEX. It's just indirectly. So we're partnering with various broker dealers. We're partnering with institutional investors, the pensions, endowments of the world. But if, for example, if a John Smith had purchased shares in in a RegA Plus security, or and wanted to purchase additional shares, or wanted to purchase or perhaps sell his shares, he would have to route that trade through one of our member broker dealers. So we've got broker dealers that are onboarding the platform and becoming members of the ATS. And our vision of and why we're doing this is simply just because our network, we believe, while we have a pretty large indirect network, just given the amount of offerings we've done on the primary side, it's far larger if we partner with other broker dealers, other ATSs, other institutional investors who are going to have a far greater network. And we think, by doing that approach, we're going to ultimately reach more people, get more eyeballs, and hopefully be able to create more liquidity. We've contemplated doing, kind of direct to retail format, but that's not something that we've decided on. And right now we're sticking to our guns on the strictly institutional and hoping to create really that network effect.
So that's great, and thank you for saying that. I'm going to be the first cheerleader for ATSs who are very clear and concise, and I told you that on the call, who you're targeting and how you can come into it, because there's been so much ambiguity in this subject. A lot of people jumped up and down. A lot of people are misleading investors that I'm going to be trading in this thing, and it's just not the case. So Joel, I want to come back to you now. The same question applies, what sets it? And then we're going to dig into a little bit deeper on the processes and the issuers, because I think that's the next layer of this discussion.
Yeah, from our perspective, there's a similarity and a difference to the way North Capital does it. The similarity is we totally agree in the fact of getting there through partnerships. That's really the way you expand and where you get the most players in, so that the network doesn't have to be built, but it actually can be brought, not bought, but brought. So that when you're dealing with pipelines of whether it's transfer agents or lawyers or accountants that are coming in with pipelines of issuers, the issuers bring with them a decent amount of subscribers that allow the network to then naturally grow. We are targeting all kinds of investors, not only the institutional investor, but also the retail investor, and doing so directly. And one of the reasons we're doing that is, again, similar to the way Jake described it. Finding a way to get liquidity is of the essence. Everyone needs to find that way of getting liquidity. We feel that one of the best ways to get it is to make sure that the players are diverse enough that they're all thinking a little bit differently, and therefore they're coming in with different interests. I've had experience in building ATS. This is the 9th ATS I've been involved in, and they're all on the traditional side. One of the earlier ones was a crossing network at Instinet, and one of the problems that the Instinet crossing network had in the beginning was it was solely focused on really one type of customer. And wouldn't you know it, most people were coming in on one side of the trade because they were all thinking alike. And the key is to get the diversity of investors to make sure that people are thinking differently, and therefore you'll have buyers and sellers and more aggressive ones and more passive ones, and that creates a market. So we look at it and say we're going to target not necessarily the end user investor. We are going to service the end user investor, but we are going to target the pipelines that will enable those investors to reach the liquidity. And they'll be able to get there directly. But the key, as Jake was saying, is to make sure that you have partnerships that enable all of those liquidity partners to bring more and more players to the table.
And that's pretty interesting. The little nuance here that I hope you're okay, both of you, is that the 2-8 both North Capitals PPEX. I hope I got it right, Jake. PPEX.
Yep.
Okay, good. And then the Rialto markets. The distinctive difference. They're all going to help the individual investor. And Jake is approached. They're still going through other broker dealers, but the investor is going to need to deal with a broker dealer. In this one, you're still going to be targeting the broker dealers, but the investor can come in by themselves. That's really the two distinctive difference. And nothing. What I like about this conversation is that none of us are saying we're trying to remove the not so much the layers, but the regulatory elements that are already in place that can help bring secondary market alive. Would you agree with that? I mean, in general?
Yeah. So I think the regulatory environment is essential for the secondary market to be successful. If you're going to get the players in, and I think the institutions are getting there, and we're in the first inning of that game. The institutional players are going to get bigger and bigger in it, but the comfort level needs to have a layer on top of it that's a regulatory layer.
Yeah, no, I would echo that. I mean, if this is the wild, wild west, it's hard to gain traction just because there are players that will place phony bids, and you want to make sure everything's regulated from the securities you're trading, the processes, and how the ATS is operated, in order to create really that trust and credibility in the market. And by creating that trust and integrity, we can hopefully drive this market forward.
Well, you can. The reason there's a smile in my face, I'm going to tell you. Okay, I'm not shy about how I feel about ATS because I was one of those few, and I'm going to admit it. It's not so much that I jumped on the bandwagon. I believe what they were telling me. I'm not here to discredit, but I know that we all got excited. What was it, 3 years ago, and we weren't asking the right questions. I've learned so much from people like yourselves, Jake and Joel and Sherry, that I now know the questions to ask. And I'm just one person, right? And what I'm hoping to unravel today with both of you, and you've been very kind in our previous meetings to educate me, because I think if we have an educated market, more will come to secondary market better prepared, rather than nobody told me this. I wouldn't have, nobody wants that kind of experience. So, but we're going to come back to the whole process. But obviously, the topic is the impact. I mean, if I'm sure all of you have met David Wield. I mean, and the people who were part of the Jobs Act. I remember in 2012 when somebody actually said that we're liquidity, everything was saying it's too soon. There's no, we need to get the rails started. But now, 9 years later from the signing of President Barack Obama bringing the Jobs Act in, look where we are. We're finally having this discussion, and people need to understand 9 years. It's taken that time for everyone to understand how to do it. First, this had to happen before, you couldn't have the ATS before you had this, and now we're here. But so I want to ask you both, individually how you feel the impact will happen. Obviously, you have experience from the institutional side. I want to go through the impact for them, the accredited, and most important to me, I think it's the 233 million Americans that just never got a chance to participate. So I'll put it on you, Jake, first, and then we'll go to you, Yoel. And this, I think it's an important part of the discussion that just, I break it down by investors because that is the way we are, right? So floor is yours.
I mean, I would say probably the biggest impact that, that a secondary market's going to have on RegA Plus issuers is really the marketability. I mean, that's, ultimately the reason you do a RegA Plus security is to be able to raise money at hopefully favorable valuations. And, by being able to reach retail investors, it's, having that liquidity option is key because, there's, plenty of retail investors that, for one reason or another, investors in general, retail, institutional, there's always going to be that percentage of investors, whether it's 5, 20%, that for one reason or another, fail to judge their need for liquidity correctly. And there's going to be people that need liquidity. And right now, the process is there are firms out there that will buy secondaries, and typically it's, they get a pretty good deal from an investor because they need to get out. And hopefully by providing this liquidity, it makes these offerings more attractive to the greater market. And the second part of that is a lot of groups that are issuing numerous RegA Pluses, they've got investors that wanted to get in on the last one, but they couldn't because they were oversubscribed, particularly in a lot of these series LLC structures. And there's going to be that 5 to 20% of investors, like I mentioned before, that needs that liquidity. And then you're going to have that investor that didn't get in on it and will, hopefully want to buy through the secondary market. And I think overall, it really just increases the overall marketability of your RegA. If you are able to provide a potential liquidity solution, obviously nothing's ever guaranteed in this world, but by having that potential liquidity solution, I think it makes you far more marketable and hopefully, I think lowers the cost of capital, just given that there is less liquidity risk.
Yoel.
Yeah, I think there are basically three main components as to why the secondary markets have great advantage. And Jake touched on certainly two of them. The first one is the ability, even from the capital raise side, to have an exit strategy. We know that there is a cost when you can't exit. And if you are investing in a certain security and you think it's going to go up 10%, but you're not going to be able to get out unless you give up 6% on the downside, the investment is a completely different investment. And having having platforms that allow you to get out of those securities, to have an exit strategy, a monetizing strategy, is essential for any issuer to speak to their investors and raise capital. It's just another sales point. The second part of it is that that's for the issuer. For the existing users, they have an ability to now monetize. An existing user now has a platform upon which they can go to attract some form of liquidity. From the issuer's perspective, it also gives them an advantage in that they can get other investors in a secondary market. And I think Jake was touching on this as well, that it's not just the people that first invested in your company, but now you're able to expand by going into the secondary market and having other people. They might be replacing the first ones, buying and selling, or they might just be additional investors by taking part of the shares that were offered or originally sold. But there's a third one I think that's also very important, particularly for RegA companies and series issuers of RegA companies, or ones that are just issuing small amounts at this point and have growth opportunities. And that's brand recognition. The fact that you are on a platform and it's not just your users that know who you are, but actually a broad range of users that are maybe not invested in you, but they see your ticker flying across their screen every day. or they know that there's an availability to buy and sell your stock, and they start looking into it. When you come out with that next Reg A next year, 2 years, whenever it is, there is a much larger audience that you can attract simply because you've created some form of brand recognition. And that should not be underestimated. It also, a fourth element, which I want to touch on, which is part of the branding, is the empowerment aspect. Now the issuers have the ability to be empowered to get their investors. So if, as many of you know, through KCX, you are able to create this microsite so that all you need to do is draw people to your area, to your website. And you have now empowered yourselves to get issuers, to have people trade in, to get investors, to have people trade in that security, all through the empowerment that you have within your own website. And those are important elements of what a secondary market can deliver in the entire brand recognition side.
You know, Joel, I'm delighted, and I'm sure Jake, I'm sure it's the same tone and aspiration is that we're noticing that it's starting right from the beginning. It's the empowerment of the company, but we're continuing that journey, empowerment of how the capital is raised in an efficient manner, how it's managed, and now we're talking about secondary market trading. I'm just excited that we're real people with real licenses, and you can hear my little one in the background saying, yes, we got to do it, even for the little guy. I think it's important. I think everybody needs to understand that it's not just an isolated item. You go there to dump your shares, or I believe it's part of an overall strategy. I've been using this a lot lately. Is a lot of entrepreneurs sometimes don't tell you, their lawyer or everything, in fear that if you tell them too much about what your strategy is of capital raising, they may not want to participate now and wait for later, right? There's some pros and cons. I've been of the opposite of opinion. I say, hey, listen, you're coming into this deal. This is our strategy. This is our next raise. And eventually this is where we're going to land. This is our route. Here it is. And I feel you said the word. I feel empowered by it. You know why? I don't have to worry about whether I told you or you something different. I told you all the same. We got 2 VCs on our round. We didn't get a lot of them, but the ones that did know exactly what I'm doing next. Exactly. I'm doing a Reg A. That's it. I'm doing a Reg A. I never hit it. And I'm offering you secondary market trading for your securities. Jake, you said it. Nobody's promising that the venue will have everything, but what we're now giving you is the venue. I think that's it. That's the piece of empowerment that needs to play out here that I think is really important.
And I think speaking, I'm sure Jake would agree with this. And by giving you the venue, and it's not perfect, we're asking you, users, to help us. We both have large organizations behind it to make sure that we can fix it or build it or enhance it or whatever it is that you need. And once we've delivered the venue, now you're empowered to help us build it further.
Yeah, no, I mean, I would echo that. I mean, we're always looking for feedback from users because ultimately, it's the users that are going to drive this market, not us, right? And so if we're not taking feedback from them and trying to optimize and better our processes and our interfaces, then yeah, I mean, then the market won't thrive. And so yeah, I completely agree with you on that.
Yeah, it reminds me of the early days of any of the online funding in the kind of platforms we see today. Before, it was just sort of put a lipstick on it, get them to log in. And over time, people have recognized they're listening to the audience. I need to add this. I need to add this. And that's part of the journey. And when I look at any type of auxiliary element to a company like an ATS, how do we make the journey not only good for the BD, broker dealer, the company, the issuer, and then of course the most important person, the investor, and then of course there's another element to this that we often leave out, but we can't anymore, and that's the transfer agent. This is for secondary market. These are the 4 key elements for that transaction to be fluid. Of course, the money, it goes without saying, but for the transaction to be done in an efficient way, because that's really what we're talking about now, is how do we make it efficient enough so we can transact? Otherwise, we're back to where we were 10 years ago, and nobody wants that. So, Jake, you and I, we went through this discussion, and I want to come back to that now, and that is, so the being an institutional side based ATS and in the market, how did you know? Obviously, you're targeting the broker dealer. How deep is North Capital going to get involved to make sure that the investor, the end user investor, has a component in this journey? Obviously, knowing that at the moment you're coming in right to the BD side. Just wanted to hear your thoughts on that.
Yeah, no, absolutely. So we have built out a slew of APIs that the broker dealer can integrate. And a lot of the groups that we work with, the brokers, I mean, they are working directly with the end platforms, right? That these investors are working with on the primary arrays. And so, these platforms and the brokers are able to integrate the APIs into their existing platform and to be able to show kind of what orders are available for the investor to be able to place trades. They're just not, they are placing it, an investor can place a limit order directly into PPEX. It's just not on PPEX.com. It's on abcco.com that they invested into the RegA Plus security, or it's on BDA.com, right? And so they are able to it is an indirect direct relationship, if that makes sense, where via the APIs they are able to place those trades, and then essentially the broker is reviewing and approving the trades, and then that's getting matched through our system. We've got the system built out in the reporting with ORF for smooth regulatory reporting, to make sure we're covering all of our bases. And to your point, where the transfer agent comes involved is, a lot of times that the issuer is already integrated with the transfer agent, and they're able to pass information via our APIs to the transfer agent, or the BD is integrated with the transfer agent, and they're able to do the same. As the BD on many various RegA Plus offerings, we were kind of hands off with the transfer agent in most scenarios, but the issuers were readily integrated via their own platform. And so we're trying to Joel talked about it earlier, empower them. So if they're already connected to a transfer agent, like, we're not here to tell them who to work with or who to integrate with and who not to integrate with. We want to via our APIs, we want them to be able to plug and play. And so they can kind of work it out, not necessarily on their own, but not have to change their processes already. It's just a matter of one additional kind of clip-on item, so to speak.
Sorry, I had myself on mute there before I started talking. So no, that's great. I mean, I often wondered. I mean, for me, the investor, because I've seen it. This is what I saw in RegA, and I often share this with everyone because it's important for all of us to understand what happened on the primary. And so for those on the primary, I'm just picking on one regulation, RegA. Why? Because that's the one with the largest crowd that could have a really good effect on secondary, both Rialtos and North Capital, is that this investor's coming in, putting in 500,000, 10,000, whatever. But when they're going through that journey of that investment, and they click the submit button and all that, there's a lot of darkness for them. Meaning they are asking. So we stood in the backside for a long time saying, okay, I thought it was taken care of. And as it turns out, they were completely in the dark. And that darkness created kind of this confusion, anxiety, and some of them were a little bit more attuned to it. And I wonder now, what I've been thinking more about always, I keep thinking about that end user, because that end user experience to me is everything about anything, whether they're buying or trading or transferring, the more the light there is. So, and that's a part that I think it's one where I walk away from a lot of ATSs, where it goes only this layer, and after that it's sort of like it's on your own. And I go, okay, I got to build something. So Joel, I mean, you and I've had, well, you, me, Sherry, and others have had many discussions on this. So I'm obviously you are focused on the end user component of it, and to make sure we have a lot. But just be interesting. There are two correlations here, two different types of ATSs that I think could be good for people to kind of understand the two differences and the two different value propositions for the end user.
Yeah. There's no question. There's a different approach in the micro level, but actually, I think on the macro level, we're aligned. I think North Capital and Rialto are both going towards the same end goal, which is how do we empower the ultimate user to be able to get involved and make their decisions on their own. Whether you're doing it through some institutional capacity or you're doing it directly is certainly a difference, a nuanced difference, and an important one. And it's necessary to understand the differences. But regardless, it's the other parts of the ecosystem that come into play, and the connectivity to all those other parts of the ecosystem that's essential for success. So from our perspective, onboarding, making sure AML and KYC, anti-money laundering, and know your customer issues are not only put into place, but scaled, is an essential element, because we're not onboarding just a few customers that then have a whole load behind it. We're onloading the end user. So we have to put some focus on the scaling part of it. It doesn't mean that others that are involved in this don't have solutions for that. It's just built a little bit differently. Similarly, when it comes to the transfer agent and the trading that's done. So we'll be messaging that transfer agent through the end user's account, as opposed to maybe the broker-dealer account. But regardless, the essential elements are making sure that all of those component parts are in place and on, as we call it at Rialto, the rails, so that wherever you come on and whatever station you come on in that railway system, you can connect to all the other people in the other stations. And again, whether it's the end user or not the end user, you still need the same results.
Yeah, I agree. It's I think what's going to become critical more so in ATS is, in order for the crowd to come in, or not just the crowd, because we've seen institutional. I think that what is clear is, and because both of you have been doing this for a while, is that institutional has been doing secondary market trading for a long time. There's no way it didn't. You say you built what, 9? Jake, I don't know how many you've been involved. I've done none, so I've just been an observer. But it means it's been happening, but it's only been one layer of investor. So the impact here is that there could be a new form of investor that could have an impact on the secondary markets that we have not seen before, whether it comes in through the same participants, the broker dealer, or directly. But there is a BD side to it. And I firmly believe that the key to the success of all of that will be the same fluidness that we're paying attention now on the primary, and in the middle is going to be the secondary. I believe we're going to. It's just my personal belief now is that what I've been watching on the primary has been where companies get certain things because that gadget looks good. I need that gadget with that gadget with that gadget, and I put it together. It gives me what I need. That may not necessarily be the one that gets me to the finish game. We're now learning that that's not going to get you there anymore. Something different, and that's part of that evolution of movement that I see. And I think it's an important element that I think companies need to consider, is that as they start their journey of their capital raise, where is the end game? Maybe it's both, but still, how are you going to get there to make sure that either one you take, you have the tool sets to provide that to investors? Because otherwise, what's going to happen is this. We're going to see a crowd who's getting bigger and bigger year by year and year out, who is going to understand that if they shout loud enough on Twitter and Facebook, people will listen, and that will happen. That you said empowerment, it can go the other way. We've seen it, right? Don't want to bring politics into it, but you know what can happen to a crowd, right? It can be riled up, and people get pissed off. So so I think I bring this discussion because I'm a firm believer that if we don't see it that way, with in that perspective, we are going to think that, oh yeah, it's all happening through, but because we're relying on the other party to do that part, it will hurt us all, because the way the journey of an investor, what I'm noticing is that they associate it as one. And
I
that's
think
it.
I think it's kind of, I don't mean to simplify trivialize the analogy, but when you're going on a highway, the idea of the highway is to actually get you to a destination. If you built the highway with no exit ramp at that destination, then the highway is useless. When people are coming in to invest in securities, they have a destination. It's not just that I own this stock, it's that this is going to make money for me. And if you can't have a solution that monetizes it, an exit ramp, when you are trying to monetize, then you don't have the solution, right? A highway without an exit ramp leads to nowhere. And we need to build the highways with exit ramps. And the secondary markets are very often or we think, the most effective and efficient way of dealing with the exit ramp.
Jake, you were going to say something. Sorry, bud. Go on.
Oh, no. Yeah, I mean, I would echo that. I mean, ultimately, the ATS here is to provide that liquidity solution if, there's the investor that needs to get out, or the investors that has been there for a while and wants to monetize. And that's our goal, is to be able to bring in as many partners as possible. And often the times that the partners we're bringing on were, the brokers that, were working on the initial primary raise, or were involved maybe as, as an introducing broker. And so we think by creating that, going that familiarity route where they're working with someone that they're already comfortable with, it's just being routed through PPEX kind of in the background. We want to provide as much transparency, and we like to think we're doing that via our APIs, and that gives the user a little bit of insight into exactly what's going on with their order, and hopefully we'll route their order and ultimately get it executed to provide that liquidation and monetization event.
Keep muting myself so you guys don't get to hear my little one. He's riled up. I'm sorry, everyone. I'm not going to apologize. Sorry, he's teething, 7 months old. If you ever want to feel the pain, there it is. He's coming, he's getting them all. So thank you, everyone, for your patience there. So let us go back to an element now, on the secondary that we don't speak about, but it is important. The one is the impact, and for the assurances for the investors when secondary can happen. Obviously, there's a number of undertakings that a company needs to do. So one, obviously, Jake, they're going to come to you and sign up, and that's part one. And you'll say, and then they need to do something else. There's a second element that up until recently, it was left out of the conversation. How that happened, I don't know, but we're definitely going to talk about it. And that's called Blue Sky and the securities manual. So Jake, if you could start us with that, and then I'll be coming back to you on that as well.
Yeah, no, absolutely. I mean, that's a big part of the equation, Oscar. I would definitely agree with that. And, one of our solutions is we've made an investment into a firm called Guard, who's run by a guy named Woody Neese. Our CEO, Jim Dowd's on the board there. That's our kind of our first referral source for Blue Sky filings and regulation. If there's an issuer that already has that lined up to another provider, then we're certainly happy to use them. But that's kind of our first initial referral source, just given how close we're working with them. And yeah, I mean, I would agree that that's a big big key to this Reg A trading market is that you're going to need to get that taken care of. And just to make sure, number one, that you're in compliance, and that's part of being regulated and trying to create that trust and integrity in the market.
Yeah, there are, to your point, Oscar, there are several things that have to be taken care of aside from, signing up and onboarding yourself to an ATS. And, one of the lead ones, whether you want to call it an attorney or just the legalities of it, it's very important for issuers to recognize that there are legalities that have to be dealt with. Blue sky is an important one. And there are, as everyone knows, there are the 7 states that are particularly difficult and require broker-dealers to be involved. That's an important element. Those are not small states. They encompass a significant amount of potential investors. And if those end users are wanting to invest in your security, it would be a shame to sort of let that go by the wayside because you haven't dealt with the blue sky requirements. They cost some money. I don't know, how much, whether it's a lot or a little is all relative. But nonetheless, just dealing with all of those regulations and the legalities of it, making sure, all your ducks in a row as an issuer. The broker dealers will do a lot of that work for you. They'll do a lot of the vetting. They'll do a lot of the AML KYC and making sure things are happening. But to assume that you can do this without really some real legal guidance on some of these issues, I think is a bit naive. It's very important to make sure that you have the partners in place. And as Jake is saying, with the group of guard they go to, I'm sure there are others that they deal with, just like we have a group of others that we use to help us assure you that the issuer is going to have everything that they need, because we want to just make sure that it's easy for you and it's a singular experience to make sure all of that is covered.
Yeah, that is a good point. I mean, obviously clearly secondary market's going to get started. There's guard, there's trade check, issuers. But what needs to be clear, I think, for clarity, because I know this comes up a lot, there was this kind of, I want to call it a gray area. Some issuers go, oh, I hear that I can just create an intranet and let my shareholders trade. No. Okay. So I hear I can put my stuff on Craigslist and no. So it's very black and white now, what you need. These are 2 very important elements that you need to consider. So what does that mean? We're telling you what you need to have for the planning. No different than when we tell you what you need for your raise for Reg A, Reg CF, and Reg D. We tell you all the things, audit it, this and that. This is just another part that you need to include in that roadmap of your capital raise. If, to the point of what you all said some time back, you need to think, if you're going to think of liquidity, you need to put that into action and you need to plan for it rather than, oh my God, I need to do something and I didn't, now what do I do, right? So I think it's important that people recognize why there is this requirement. And it's interesting. And I've looked back at every webinar that I've done on secondary market from 3 years ago. Not a single person ever spoke about blue sky. Not a single person ever talked about the securities manual. And it's amazing, I know why all of us were working in the background building stuff, but nobody ever brought it up. And not only that, they weren't even aware of it. So that awareness is opening things up for everyone. That is, again, the only way we can have impact, positive impact, is through education. So people know and sign up properly to the different phases. The same way Jim Dow does. Jim, when Carter went live, he didn't go and bash it. He just, hey, congratulations, guys. Watch your language. You're not an exchange. You're a secondary market. And that was good. That was him to, educate everyone. Do not use the word exchange. Something that simple is one that I spend a lot of time on, where people keep thinking that. And I want to hear both your comments on this, because we keep using the word ATS and secondary market, and the audience here are not hearing the word exchange. So Jake, I mean, there is a distinct differences between these two.
Yeah, I mean that's correct. It is a minor difference, but nonetheless, it is. I mean, we are not an exchange. We are not the New York Stock Exchange. We are. It's it is a very not a closed market, but yeah, it's a minor difference, but nonetheless, we are not an exchange. And if you hold yourself out to be an exchange, it is misleading investors. And while we accomplish many of the things that an exchange does, we are still not qualified or registered as one. So holding ourselves out as an exchange would be misleading investors and pointing in the wrong direction.
And those terms sometimes that you use, not only the word exchange versus ATS. We too are not an exchange, we're an ATS, but sometimes there are other words also that are slight differences. We don't talk about listing your securities. Listing is an exchange term. You don't list your securities. You place your securities on our ATS, but you don't list them. But there are these words that lawyers get paid a lot of money to make sure that they're correct. But nonetheless, as far as the functionality is concerned for both issuers and investors, it accomplishes the goals that you need. It allows an issuer to have their securities traded, matched on a platform, and it allows investors to come into that platform in the secondary markets and buy and sell. And those, I guess, are the main functions of what these matching engines will perform, which are quite similar.
Yeah, but similar is one thing, but and using the wrong terms can be misleading even to the general public who only know, what are you traded on NASDAQ? Is that what that's like? Oh, yeah, similar. I find it that we need to break that the same way that private shares, public shares, right? Same thing. And I think that the audience today needs to really understand why we can't use that word. And I see Jim and I see all of us constantly giving heads up to those who do, because I'm sorry, gentlemen. I mean, the reality is that here we are, and I'm sure there are many ethical other players as well, but there are those that are not. And those are the ones that are going to hurt North Capital and Rialto, because you'll have to work twice as hard to educate the market as to why you were different. Because once people lose money, you know what it's like, right? They paint it all under the same umbrella. Oh, I don't want to touch anything with blockchain because it's a scam. No, not everything's a scam on blockchain. It's what they did with it. But again, it's going to take a while for us to flush ourselves out of that. And as long as the SEC keeps targeting this environment. So I'm glad you both share that. The difference is why the terminology will never be used as an exchange. Thank you for that education. It's not a listing, it's a placement. Okay, see, I learned something. And my bigger education, now I know what it means when people say it's institutional grade secondary market, which means it's still retail. It's not saying the retail the only difference is that as an investor, I will go through my broker dealer to get to that trade. Other than that, it's still secondary market trading of the private shares. And so let's look ahead a little bit. We're now getting started. We're just getting, think of where 2012 and the secondary market. Where do you think we're going to be in 3 to 5 years as far as momentum? What do you think is going to be the key indicator that the impact is working? Jake, I'll start with you.
I mean, I think, we're starting to see a lot of, groups join our platform, and we're consistently trying to build new partnerships with firms that have similar visions. And I mean, I think, a year and a half, 2 years ago, maybe we were a little ambitious on where we'd be with the ATS. And I think, the regulators kind of gave us a new perspective on it. But we are, steadily climbing and trying to ultimately get to a place where people can trade without taking a 10-15% haircut on their security. And I think that's ultimately where we're going to get. Maybe it's, in 5, 6 years. Maybe it's sooner. I sure hope so. We think by partnering with various firms that have their networks that are already active in these securities on the primary side, that the secondary side will be really a smooth transition. And I think we're going to get to a place where you can, actively trade your securities. That may not get matched, within 5 seconds like it does on E-Trade, but maybe you're matched within, a few days or even a week. On the second part of that is really kind of the settlement and clearing process. I mean, in secondary trades now, when you're sending stuff to the issuer to get approved, and then it's updated on the cap table, whether that's internal or they use a cap table management system or they use a transfer agent, that process now can take weeks to a month, just even once you have an agreement on price and size, just to get it cleared and approved at the issuer and transfer agent, it can take weeks to months. And I think, in the coming years, we're going to hopefully be able to get that down to, days, if not, a week top. It's still, we're still working towards that goal, obviously, but I think in the coming years, that's where we'll be.
Great. Joel.
Yeah, so I think the goal is to increase the breadth of investors who have access to private securities and the depth of investment assets available for investment. If we can do those two things, just increase the amount of people that can actually get into this and the types of securities that one can get into, that would be where the market, I think, is going in the next 3 to 5 years. I think it'll get there in that amount of time. The things that to keep in mind, and when it's succeeding, I think when we start seeing a lot of real big time institutional players getting involved, when you start seeing the players who are right now all looking at it, they all have departments that are considering what we should do, et cetera, but maybe they have a toe in the water, but they don't even have the whole foot. And we'll start seeing that when we start seeing those players come in, when we start seeing issuers that are maybe a little bit larger coming into the play. Maybe it's Reg A, maybe it's Reg D, maybe they do serial and 50 million rather than serial and 5 million. I think those types of things are going to be important to note the success. The last piece of when you'll know that it's being successful is when prices are starting to get driven down. And that's not that prices will be driven down because of demand, but rather because of efficiency. As this gets more and more efficient, as we can start creating and taking down boundaries and creating better pipelines to and fro various areas, the costs will come lower and lower. And that kind of efficiency means that the business is growing well enough. I think those two would be great key performance indicators in determining whether we're reaching the goal of increasing the breadth of investors and the depth of investments.
That's great summary, guys. And you guys give me an idea, and I hope you'll both agree to come. And if you, one thing that we did, and you started touching on it, Jake, and I liked it. I've come up with 8 different ideas coming from, because I think about sometimes the questions people ask. And one thing that just stumbled on me is, how does secondary market work? How does the trade actually, how does it actually work? Are you guys both okay to come back and we do something just on that? I mean, because it is so interesting, because you started talking about settlement, Jake, and at that moment, it just clicked into me. People don't even think about that, right?
Mm-hmm.
And that's going to be a great one. So I'll be inviting that. Thank you for that. I do agree with you on your point, Joel, that some of the indicators will be when institutional gets in. Well, I got some good news for you. I mean, one of the things we've been waiting on Reg A is when an institutional would take a big enough chunk that people would pay attention. And that just happened on a Reg A deal that raised $50 million. It was a very significant chunk of the offering was done by an institution. So, which means that if they're seeing it on the primary, it's definitely, you're right. I firmly believe when the bigger dollar amount can see it and understand it, cost efficient, and meet all their compliance requirements. Listen to this, everyone. Compliance requirements, which is usually the bottleneck, but we can all address it. It will be the key. I think that's going to be the indicator. We're calling 2021 the year of Regulation A level up, and it already started, not only for the size of the capital raise, but the type of investor that's now coming into it, which would fundamentally change the secondary market trading. So this has been an exciting conversation for me, because 2 years ago, I wouldn't have had this one with you. I wouldn't have. I'll be honest with you. I'd be asking, so, what kind of companies can I bring you? You notice that it's not about that anymore. It's really no longer, I'm raising 20 million. Should I? It's not that anymore. We need to understand what a secondary market ATS is. How does it work? And I'm going to bring you both in. We now know the impact for the investors, institutional, high net worth, retail investors. It's here. So I want to be very clear. North Capital's live, right?
That's correct.
See, it's here. And Rialto's live. It's here.
That's correct.
And with experienced providers, I rarely ever do this in education, but education is part of it. Is people go, where can I touch it? And it's real. It's real. You can reach us. You can go to KoreSummit.io website and get the information. And I'm going to include another topic of this, because I think that it's going to be the topic of mine now. How does it work? How does it work? So people can visualize it, so people don't get it confused between the public, that exchange element. So Jake, I want to thank you both today. I mean it. And my little boy, Maximus, he thanks you too for being patient, and everyone else who came in and those listening in. Thank you so much for coming up to the KoreSummit webinar. It will be available to you on YouTube or KoreSummit.io. We do have another one this afternoon at 3:30 this afternoon. Can I use my IRA for online private companies? So it's going to be a great topic. Thank you. Have a great afternoon and phenomenal week. Take care.
Bye-bye.
Thank you.